This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, you're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, beginning of the week still, first half of the week. We are coming to you as always from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning Prashant, good morning Nigel. And the going has been good. The Nifty has been hanging around that 21,000 mark. Doesn't look so bad across global markets as well.
It doesn't, right? And things are looking quite okay, although I think there is a bit of a mishap with one stock overnight, which is Oracle.
Well, that's right. And out here, I think we'll have Infosys out here. So tech will be a little under pressure. So high amount of dependence, I think, on the banks and the financials. So let's see how it goes.
Yeah. Absolutely. Well, let's just kick it off with what you need to know as we begin another trading session. Yesterday was quiet, at least on the frontline indices. The market still, by the way, managed to move a little up, 20-25 points or so. But as we began, same time yesterday by saying that the momentum is, of course, starting to slow a little bit. And that's to be expected. You can't go, with the same ferocity that like we had on Monday, Tuesday, Wednesday last week. It will, of course, slow down a little bit, but the trajectory has been up. I think that has been extremely clear. So the handover from overnight, Wall Street has been positive. The Nasdaq ended up. The S&P was up about 0.4% or so. And by the way, all large 7 mega caps, so as to speak, the Apples and the Alphabets of the world, they all ended down. But the Nasdaq was still higher because the broader outside of the mega cap, the broader market did much better in the US. So, we'll talk more about that and what that means. You had some data as well. Before that, the other indicators, the 10-year was absolutely unchanged, 4.23. The dollar index at about 104. Nothing very much to write home about. Almost unchanged levels from where we were yesterday morning. The New York Fed one-year inflation expectations has softened. It's softened to the lowest since April of 2021, and I think that is significant. So on Friday, when the jobs number came in hot, and that kind of raised worries that maybe, cuts next year, Fed rate cuts next year will be pushed out. You had the Michigan, inflation expectations, which softened. And now, overnight, you've got one more data point, which kind of shows that. But in any case, we get the CPI, the headline CPI, the core CPI, where the focus is going to be tonight out there in the US. And then, of course, tomorrow we'll get the Fed decision. Tomorrow evening, which means that Thursday morning is when we'll know what the Fed has said. There's a Powell press conference, etc. as well. Will he push back on the 130 basis points of rate cuts, which the market is already pricing in 2024? I think that's going to be the one thing. I mean, if you had to just pick one thing, the markets are going to be waiting and watching out for. So these are pretty large events. The market has done very, very well, right? I mean, coming up to this particular point, extremely well, exceptionally well. And you're kind of getting into some important cues today and tomorrow, and actually on Thursday as well. So maybe, just maybe, I mean, things are going to be on kind of a holding pattern zone till we get some of this stuff out of the way. Now, Oracle is down 10% overnight after hours. They reported numbers. There's some slowdown in the cloud business. And, of course, there is the Infosys news flow as well. The CFO has stepped down. So IT stocks, perhaps, you shouldn't look for outperformance there. How much they kind of react to this, we will see. Oil prices, they're around 76. There's not very much there. And later today, in the middle of the day, you get the industrial production numbers and the consumer price inflation numbers, India numbers. And I think the CPI is more important. The IIP number is more backward-looking. Now, on the Nifty, the levels don't change very much. We put these out yesterday as well. On the upside, the Nifty's got 21,050 and 21,100 as levels, which it needs to get to. And it will perhaps get to. It's a matter of time. On the way down, the lows that we've seen over the last couple of days has been at about 20,850, and that's where one should draw supports. And if that doesn't break and that doesn't give you a clear signal of a reversal, even if a minor pullback, I think you're basically headed up. On the Bank Nifty, we need to get a close above the medium-term resistance, above the 47,780 level. Again, the rising medium-term trend line that we've put out, it's kind of moving up just a tad bit. And a negative close here on the Nifty Bank will give you the first indication that maybe, you perhaps are in for a bit of a minor pullback. So watch out for a daily close on the downside, which we've not had on the Bank Nifty, even though yesterday was absolutely flat. The market did give up a lot of the gains through the course of the day on the banks. PSU banks, of course, have been the sector, the go-to sector, and very strong gains continue. The GIFT Nifty will come up on your screen, and I think that's indicating a 55, 56 odd point higher start. What do you do after a gap up like that? I think it's possible that some of those gains fade out right after the open, and kind of and as we go into the session, into that important data point that is the US CPI and the Fed decision as well. So perhaps expect more quieter kind of markets like the one we had yesterday as well. Sonia.
Oh, absolutely. This is a bull market. No two ways about that, right? The Nifty is sort of building onto its gains. It's latching on to every good news and, piling up those gains, as we've been saying. But I would watch out for the tech stocks very closely today. Two pieces of news, of course, as we told you. One is Oracle, missed their estimates. The company missed their revenue estimates. But on Infosys, I would be interested to see what happens, because there have been senior level exits across, the technology space. And in Infi, the CFO has resigned. There is, of course, a very strong person who has stepped up in his place, who's had over 18 years of experience in the business. But will Infi be a buying opportunity? That would be interesting, because let's not forget, Infi had a strong set of numbers as well. In the quarter gone by, its Q2 numbers were the strongest amongst its peers. So will the street use this as a buying opportunity? That would be an interesting thing to see. A lot of macro data as well, IIP for October, CPI for November. But I'm also looking at the numbers very closely in terms of the FI and DI participation. So FIs continue to buy in the cash markets. 1,260 crores is what they bought yesterday. And all eyes will now be on the FOMC meeting. The final meeting of 2023 begins today. There's no movement on rates expected, but any indications of perhaps, easing of the rate cycle is something that will be very closely watched. The announcement is tomorrow. And easing of the rate cycle is something that the people are looking at in our own markets as well. That's why PSU banks have been doing well. Real estate has been picking up. So these are a couple of themes that I'm looking out for. In fact, the Nifty PSU bank ended at a record high yesterday. So that's something that perhaps can build on to its gains today as well. Now, let's not forget that the global markets have been very strong. The Dow hit its highest level in 2 years. It's been up for 3 straight days. So in that context, perhaps you could see some more weight being put on for our own markets. And there is a gap up that we're expecting this morning, a strong bull run. But these couple of spaces is what I'm looking at, the PSU banking space, the real estate space, because if there's any talks of a rate cuts come through, either from the US or from the RBI, the street has already started to price that in.
Well, that's right. Sonia, for the next couple of sessions, I think maybe the Nifty could consolidate a little bit, because you want that big central bank event to get out of the way and then continue your upward course, around the 21,500 odd. The Nifty Financial Services Index, though, that's the one that plays out the weekly expiry today, so keep an eye out on that one. And in terms of flows, yes, the institutions were net buyers because the FI buying outweighed the DI selling. But yesterday, the FI gross flows, the total flows participation actually was 30% lower in comparison to the 10-day average. So just keep an eye out on that. It appears, yesterday their participation was much, much lower. Now, the Nifty ended high yesterday, and normally you see the VIX cool off. But ahead of a big event, you're seeing that the VIX as well is moving up. So that's one point I just want to put on the table. Infosys, why is that important for both the Nifty as well as the Nifty IT index? Because on the Nifty, it's the 4th largest weightage. It has close to around 6% weight. That'll be a little bit under the weather, so that's what will drag, the Nifty a little bit lower. And also, it could have a rub-off on the other IT stocks as well. The Nifty IT index itself, more than 27%, it's the highest weighted stock out there. So that'll be as well under some pressure. So all eyes will be on the banking and the financial names to take us beyond the finishing line. What did the FIs do yesterday? After a while, they added a few more shots in comparison to long positions, so they continue to remain net long with close to around 57% of their positions on the long side. On the Nifty data, well, the options data, 2 strikes. Well, in terms of open interest out there, 21,000 call, close to around 90 lakh shares out there. 20,900 put, close to around 70 lakh shares out there. So just plugging in those numbers, the 21,100 level, that'll be a bit of a resistance zone. While on the downside, last week, quite a few times, we went around 20,800 and also tallying the 20,900 put, seeing fair bit of open interest build up with premium roughly around 50 rupees. You get your support level of around 20,850. The Nifty Financial Services Index has expired today. I was looking at, the options data. It's giving you a broad range, 21,000, 21,400, because the 21,400 call has the highest open interest on the upside. On the downside, the 21,000 put is well fairly active. The GIFT Nifty suggesting we start off in the green. That's good news, but you need to build on that. Maybe some money will be taken off the table at the start itself. You need to get past 21,100 to see a further up move.
All right, Nigel, thanks for that. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Harold van der Linde of HSBC will join in to discuss the global setup. Our research team gets you CNBC TV18's list of top stocks for the day. At about 8:30, we'll do a fundamental stock check with Amnish Agarwal of Prabhudas Lilladher, who's our guest on the program.
All right, let's kickstart with some views on the equities front. We have Mahesh Nandurkar of Jefferies, who says that India's 7% plus GDP growth is being driven by a strong capex growth of 9.5% in the first half. Government strong capex growth of 34% in 2023 so far is sustainable, though through the FY24, as excess tax collection should be sufficient to fund pre-election social spending. He says their conviction on continued capex cycle stays. L&T, SBI, Macrotech, Godrej Properties, Ultratech, Thermax, Polycab, KEI, Kajaria, JSW Energy, Coal India are preferred plays according to them.
All right, well, let's get you some money market views as well. Abhishek Goenka of IFA Global says that the dollar is strengthened a bit post the solid US November jobs report. Focus will be on the tone of the Fed policy due tomorrow. He says the rupee continues to remain extremely stable against the dollar. Adds crude prices have softened comfortably to comfortable levels, and FPIs have poured in close to $3.6 billion in domestic equities in the first few sessions of December. Abhishek says the RBI, however, continues to mop up flows as reflected in its forex reserves, which have crossed $600 billion once again. He expects the currency to trade between 82.9 to 83.7 to a dollar over the medium term.
All right, and on the bonds, Ajay Magnolia of JM Financial says the bond yields hold steady in a narrow and tight range, and attention turns to the CPI data, which is projected to be closer to 6% levels due to persistent food inflation. He adds that the market also keenly awaits the Fed policy decision, with a focus on Powell's remarks about future interest rates. He expects the 10-year benchmark bond yield to trade in a range of 7.26 to 7.31% today.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We look at Sun Pharma, Aster DM, Sterling & Wilson, Dixon Technologies, RVNL, Fed Bank Financial, JNK Bank, as well as Spandana Spurti. All of them will be reacting to positive news flow overnight. On the flip side, you have Infosys as well as Mankind Pharma. Both of them will be under some pressure.